Guys, welcome back, and welcome back to the Calgary Market Report for February 2023. We're a little bit later than we wanted on this one, but hey, we'll still get it going here. So what's the story? Inventory levels remain low, amongst the lowest we've seen since 2006. As expected, higher interest rates continue to impact sales activity. However, a stronger pullback in new listings is keeping inventory low, which in turn caused some stronger than expected gains in price. With a new sales to listing ratio of 73% and less than 2 months of supply, we are experiencing continued upward pressure on home prices, which means we are not shifting to a balanced market just yet. And this has been shown in the benchmark price increase of 1.5% year over year. Now, notably, sales were down in the month of February at just a little over 42% year over year. And probably no surprise here that new listings were also down a little over 48% year over year. We need more listings, no question about it. And this falls in line with total inventory down almost 24% year over year. Now, good news. It appears interest rates have stabilized now, at least for the time being. Let's keep our fingers crossed. However, the higher lending rates are impacting sales activity and causing a reduction in new listings, keeping supply levels low and fostering stronger than expected monthly price gains. Also, it's important to note that the number of days properties are sitting on the market is up, but by no means does that suggest that we're shifting to a buyer's market. At 33 days on market, just as an average, it's not as crazy as it was a year ago. Now, what about months of supply? Well, that is fragile at only 1.58 months. More supply, please. Let's get into the detached market now specifically. All right, so let's get into the detached market. Both sales and new listings have declined substantially against last year's record high. It was bound to happen. The question was always, when? We have our answer. Inventory did move up a touch with those seasonal gains, but levels remain low indeed. Some of the lowest in February ever, with months of supply falling below 2. As conditions have grown tighter, this forced the benchmark price to rise 2.5% to $635,900. Supply is still a challenge in this category, and demand for lower priced homes is very real. We are, however, seeing homes priced above $700,000 heading towards a little more balance. Let's head over and see what's going on with the semi-detached market. So what about the semi-detached market? In this market, well, sales and new listings dropped from last year's record high numbers. Inventory levels are beginning to rise, but are still well below historical February data and still are in favor of sellers. The benchmark price is almost 2% higher at $568,100 against last month, but prices remain below the May 2022 peak. Let's take a look at row townhomes. So row townhomes, tight conditions continue in February with just 1 month worth of supply and have eased somewhat and are shifting now into more affordable spaces. We are seeing upward price pressure right now with tight conditions, and the benchmark price in this space has reached $369,700, which represents a monthly gain of 2% and a year-over-year gain of 9%. Now, apartment condos, this space has seen a high level of new listings come onto the market, so the pace of decline has not been the same as other property types. Strong sales to listings have resulted in the number of listings remaining relatively low when we compare this over the last 8 years. And the low number of listings has put pressure on pricing, as we've seen an upward trajectory here, also with the benchmark pricing reaching $286,000, an increase of almost 3% against last month and near 11% gain from 11 months ago. Even though prices are higher than last year, they are in fact 7% lower than peak levels of 2014. Well, that's it for February. We'll see you back here for our March report. See you soon.